Now to Wall Street, because it is set to begin a new week this morning amid growing concerns about the economy among traders. Chief Economic Correspondent Rebecca Jarvis is there on Wall Street for us this morning. Good morning, Rebecca.
Good morning, Robin. And you can feel the uncertainty over tariffs, over the potential for a government shutdown, over what's happening in the economy, how much it's slowing, reflected in the stock market. This morning, it's already been very volatile out of the gate. Stocks opening up more than 1% lower. Americans at a minimum will pay a one-time price adjustment higher with these tariffs. American businesses importing goods will be paying that price, a tax at the border that usually does get passed to consumers. And I've talked to some businesses who said they're going to eat some of that tariff, or few are even splitting it with their Mexican and Canadian counterparts, but they can't do all of that, and they don't have a U.S. alternative for their supplies and production. In other words, even if they wanted to today, there isn't an American factory or a producer where they could go and make their goods. And we've now heard from companies from Best Buy to Target who have said they do anticipate price increases ahead. Finally, there are these signs of a slowdown in the economy. You have consumer confidence. That's beginning to wane a bit. The jobs report on Friday, 151,000 jobs added. Not bad, but less strong. And with consumer confidence coming down, these DOGE cuts, which in return will start to show up in jobs reports going forward, you'll have fewer government jobs. That can also weigh on consumer sentiment as well, because if people hear that their neighbor or their friend are losing a job, they get nervous in turn, they spend less, and in turn, companies hire less. That can have a real impact on the economy, Michael.
Yeah, and as you said about the cost of goods, someone will pay the price, and it seems to be the consumer. Thank you so much for that, Rebecca.